And there you have it. The markets are officially closed on this Wednesday, July 2nd. Welcome, folks. We have an action-packed half hour here for you where we're going to be going over some geopolitical news, economic news. Of course, we're going to go over the financial charts and some of the stocks that you're most interested in. By the way, this is live. And you have the ability to ask questions in the chat. You have the ability to put in ticker symbols. We obviously won't be able to get to every single ticker symbol, but we'll try our best to get those worked into the presentation here. With me, we have Nod. Yes, NODLive. Nod provides all the news services for our members who subscribe to NODLive. You'll see a bit of that at the bottom banner on your screen right there. And so the way the format is going to work, we're going to kick it off with some of the most relevant news that will most likely affect the markets today, tomorrow, and moving forward. And then Nod and I are going to go back and forth, look at the charts, answer some questions that you might have, and then we're going to go from there. So Nod, why don't you take it away?
AJ, this is so much fun, man. We've got 300 of our closest friends live, and let's do this. So, we've got another shortened week with us this week. I remember when we used to have full trading weeks, but because we have a shortened trading week with equities and options being closed on Friday for U.S. Independence Day, that's going to bump up a lot of data to this Friday. So this Thursday. So Thursday we've got a ton of data, which is going to be led by the U.S. non-farm payroll number. And everyone is looking for 110,000 jobs to be gained in June. But before we get too excited, this morning we got a precursor from ADP, and that showed that the economy actually lost 33,000 jobs in June per ADP, which badly missed that forecast. So this is actually, AJ, the first negative number since January of 2022. Now, I know one data set does not make a market, but it should be pretty telling that we've had some downward revisions from past numbers, and then we've now gone negative. So if you want to look at some of the internals, there was a downward revision. We talked about we lost jobs in some of the professional sectors and the educational sector. That's more seasonal, which is fine. We gained some in the leisure and hospitality because of the season. But if you look, some of the jobs that were lost in the tech sector, we can blame that on AI. But I'm also concerned at just the sheer U-turn of growth that we've seen in the economy. So I'd be curious, AJ, what you think about this, and if this raises any alarms to you.
Well, it doesn't necessarily raise any alarms because and as well as everyone else, I'm used to the revisions, so we don't even know if this is real data. But what surprised me the most is how this release from ADP really didn't have any effect on the markets whatsoever. Now, if you look at the Dow, this is a chart that I have of the Dow right here. I'll zoom into today's chart minute by minute. We'll take a look at that. And you can see here on this chart that we opened a little bit lower. I'll just draw some lines on here for you so you can see that. We opened up a little bit lower. We creeped our way back up to the highs of the day in this ABCD pattern. And then we just laid flat for the rest of the day. Now, a lot of that has to do with investors and citizens in general waiting for the BBB to pass the House. And Nod, maybe you could give us a little bit more information on that, because we absolutely will not see that happening during market hours today. And it's most likely going to happen probably into the night when most people are not even paying attention to the futures market. So that's what I see here.
Yeah, that's intentional, AJ. They did not want to do this while the market was open. There's a lot of sausage making being done in DC, and whether you go one way or the other, it's intentional. They did not want to impact the market, so we'll see what happens. Mm-hmm. There's no shortage of headlines. I'm trying to capture as many as possible for the NODLive folks, but I don't want to drown you. But I'm trying to filter out the noise and see what we're going to do. I will make sure that I do post what the final outcome is this evening, and that will definitely impact our futures and what Asia does tonight, especially going into a thin market tomorrow, plus all the data that we have. So moving forward, AJ, we have Apple is facing a big hurdle after Foxconn made some changes. And what happened is we're seeing a big shift in their employment out of India and out of China because of the floods. So if you look at these photos, folks, the area got 12 months of rain within a few hours. And it's not hitting the front page of the news yet, but the supply chain, as we saw with COVID and as we saw with some of the tariff stuff, can be damaged pretty easily. This flooding is not getting enough coverage in my mind, and I think it's going to have an impact on things like Apple. And if it impacts Apple, it's going to impact a lot of different things. AJ, if you wouldn't mind giving us a look at the technicals on this, I would appreciate it.
Yeah, Apple had a nice pop today. It was up almost 2.5%. It gained just a little bit over $4.50. And what you said with regard to the supply chain, again, I think that's going to be a delayed reaction out of China. I don't see it crashing our markets, but you can definitely count on the fact that their inventories, a lot of them have been wiped out. It's going to affect their economy much more than the U.S. economy. But with regard to Apple, you can see here that we did have a slight breakout over the last couple of days from this high back in early June. And now, don't get too excited about that, folks, because we're right up against another resistance point here from the end of April, May, and into June here. And look at the volume. The volume is actually dropping. So I can't tell you how to trade, but if I were long Apple, I would certainly be looking to put on some covered calls, maybe above the market, to try to bring in some cash and perhaps lower the cost basis of my overall holding. The other thing you have to keep an eye on, Nod, with regard to those floods, are commodity prices. Right. Because, again, that's another story that's not being covered. Maybe I'll write about that next Monday on Zero Hedge. But, gold and silver have been tracking the overall commodity markets across the board. And if you look at silver today, I put a post out on my X page that I'm all back in, 100% back into my SLV position. And look at that beautiful little candle now. Now, again, don't get too excited, at least not yet, until we see a bigger increase in volume. We did have an increase in volume down here, and we did have this nice cross over that momentum line, that CCI down there. For the new folks who are following us for the first time, that CCI down at the bottom of the chart is my most favorite oscillating index. It's very accurate. It's even more sensitive to generating buy and sell signals than the stochastic is, which is right above it. But look at that. We got the crossover, the momentum line, and generally what that means is 2 to 4 more days of movement in the direction of cross, which in this case is to the upside. The other thing, I mean, there's so much to talk about here, but over the past couple of weeks on the weekly market report, I've been talking about the Jim Rohrbach method of, closing over the 20-period moving average. We were talking about the MOBO bands and what that entailed for traders. Well, today on silver, we got the close over that 20-period moving average. Now, I don't have the Jim Rohrbach layout set up right now, but if I did, you would see an up arrow right there. Now, taking a step back, I know I'm spending a lot of time in silver, but this is worth talking about. If you look at the monthly chart right here, we've got a resistance high pretty much up at these levels from the highs back in 2012. I do believe we're going to make a run for that, because if you look down below, last month here in June, we've got a volume bar. I'll zoom in so you could see that more clearly. We've got a volume bar that's almost twice as tall there as what we saw in May. And so what that means on the monthly chart is that the buyers are still coming in. Now, when you get a breakout, whether it be silver, gold, any commodity or equity, you have to understand that once you start getting into breakout territory, you are pretty much ignoring the oscillators down below, because it's a technical breakout. And again, what I put on Twitter, or X, I should say, is this whole pattern to me looks like it might be a flag pattern forming right here. You see that? It just looks like a flag in a flagpole. So if we get a little bit more movement tomorrow, and remember, tomorrow we have a shortened trading day. We close the markets at 1 o'clock, and then we'll close on Friday. But if we can get a close on higher volume on the daily chart over that candle, right as we see today, that could be the beginning of a breakout of a flag pattern. And to project the price move, you take the length of the flag and you basically connect that to the breakout point, and now you're starting to get off the charts here. So I'm very excited about silver. The crazy thing is that we've got a gold silver ratio right now of 100 to 1, right? So for every 1 ounce of gold, you could pretty much buy 100 ounces of silver. Now, the historic average for the gold silver ratio is between 60 and 65 to 1 since the 1970s. So this is the widest we've seen in the divergences between the two metals, hence the reason why the ratio is such a big number. But once we start getting into the highs here, we haven't seen, at least not yet, we have not seen any short covering or any kind of a short squeeze coming in. So that's going to be right at the top of the list for things to watch out for, especially with silver, like I said. And thanks so much. We got Heather making comments in there, and Absurd Nerd, Johnny Miles coming in. Look at that. Look at all these people. I'm not used to this right now. We're not used to having live comments on the midweek report because it's all
I'm tripping all over myself trying to get my act together. So thanks for mopping up. But AJ, let's keep going because we got some more data. Every week, the NBA Mortgage Applications Group puts out their activity. And we've got a member, Tim Lindsay, who is active in the lending space and a great person in it. And he says that it's still very dead. And we're seeing a lot of people just frozen in their tracks. So the applications did tick up week over week, but really you can see where we came from. The American dream of owning a home has really come frozen, which kind of supports the argument for some people that we need to cut rates. But if you look at our deficit, cutting rates could be a disaster, which is why I think we're just in this standoff. So, AJ, what are your thoughts on TLT with where rates are and within this environment?
Well, listen, first and foremost, I am not a mortgage expert, nor am I an economist.
Nope.
We might have to have Tim Lindsay as a guest on the show here one time so he could talk about what he's seeing in mortgages and home buying. However, remember, TLT is one that we've traded in the past, and we've done pretty good with it. TLT basically goes inverse to interest rates. Now, I don't know what they're going to do with interest rates. I don't know what kind of pressure the White House is going to be putting on Powell. But we do see that around the world, rates are coming down. The big question is, if they lower rates, what is that going to do to the bond market, right? Cool. Is that going to make bonds more attractive or less attractive? In my opinion, they're going to be less attractive. So if that puts pressure on the bond market, it will also put pressure on equities right across the board. But if you look at TLT, I do have a shorter term upside target here of $89. That was from one of our rapid fire sessions that we had about a month ago. And by the way, the rapid fire session that we do each and every Wednesday, we'll have one from 6 to 7 tonight. My goal, as always, is to analyze 50 stocks in 60 minutes, just like what we're doing here now. We look at the charts, we put price targets out, and then we sit back and we wait for those targets to hit. Well, if you look back in the past, TLT has done a pretty good job, not an excellent job, but a pretty good job of hitting targets, but they don't hit them right away. And if you look at the past, these diagonal lines that you see right here, see this one was a downside target. It took a long time. It took till November for that one to hit. But in between all of that, we have had some success. Again, this is my short-term target. So if it looks like the rates are going to drop, TLT could become the play for those who are looking to trade. I mean, it's a way to trade interest rates. And the other good thing is that they do have a pretty robust option chain, and there's different types of spreads that you can put on. So today we had a drop in TLT. I think that moving average will hold, because I think we're going to see a little bit of a test of this momentum line, then a little bit of a bounce. But I still have that upside target on that at 89. So for those that are looking to trade, let me throw this one out there. I've never done this on a midweek report. For the option traders, the way I would trade TLT is I would sell out of the money call spreads, and I would sell also simultaneously sell out of the money put spreads, and I would put on an iron condor. You can't lose on both. You can make on both, but you cannot lose on both, and you're guaranteed to make on one. So it's a fairly low risk trade. And that's what you would do in something like this that's more or less range bound. So that's what I got on TLT for you, Nod.
That's helpful. Thank you so much. Now, I do want to loop back because, we talked about the floods and we did talk about Tesla, but, they released their numbers today, which are pretty scrutinized. They're a tech bellwether. They're a high hold for a lot of individuals. Their production was 10,000 higher than expected, and their deliveries were 5,000 less. So, the stock chose to move higher on this, and I'm thinking that it had a lot to do with the technicals. But given that it's such a hot button name, AJ, is there something else that you think you can talk about, whether it's Tesla in general or where it is within the automobile market? Because I think where Tesla sits, where we are with the EV credits and how tough it is to get a car loan and where rates are, is this something that you would look at, or is this kind of a no touch for you?
Well, I like trading Tesla in different ways. In fact, last week, the VIPs, they, by the way, because they pay an extra amount for their membership, they get 5 extra trades per week or 20 extra trades per month, in addition to all of our other trade notifications that go out. And last week we put on, just like I mentioned in TLT, we put on an iron condor where we were short the 305 puts, long the 300 puts. And yesterday it looked like that put spread was going to be threatened. And I put the word out to the VIPs to hang on one more day to see what happens technically. And it absolutely bounced. It moved away from our short put spread. So this is going to expire. What I'm referring to as this is the iron condor is going to expire completely out of the money. So here's another example of how we're going to make money on the call spread that we sold and the put spread as it expires tomorrow. However, short term, this is a good sign for those who are long Tesla or thinking about going long Tesla. What am I talking about? You got the pivot. You see that? And I talked about this on the weekly market report where actually it was on Technical Tuesday, yesterday, excuse me. I defined the pivot to the downside. A pivot to the upside here is when you have a higher low and a higher high. And therefore you have that. And look down below, you've got the CCI and the stochastic down below are now pivoting to the upside. So I think Tesla is going to make a run for the high up here at 360. I know that's a way off. You get about $45 to the upside. I think it has the potential to do that. And if you're an option trader, it's really the best way to trade that one. If I take a step back, looking at the weekly chart, you can see that we're pretty much in a triangle here, which you don't see too often in Tesla. The triangle is defined by connecting all of these highs and drawing a line down like you would a downtrend, right? And then you take your line and you connect these lows. There's your symmetrical triangle. Now that candle right there on that weekly chart that I'm highlighting is a hammer candle. That's bullish. So if we start to get a move higher, especially on the weekly candles, and we start to see the volume increase, we could see a significant breakout over that triangle pattern. Now, I know this is making Fred very happy. He's one of our VIPs. I'll just do a shout out. I know Fred's long Tesla, but Fred, if it's okay, I'm going to mention on a live broadcast here. I don't have time to even get your permission, but I'm going to highlight what Fred has been doing that's been very good. Fred, owning Tesla, continues to sell out of the money calls to collect premium, and in turn, that cash that he takes in, again, lowers the cost basis of his holdings. I don't think Tesla's going to collapse. I think they're way ahead of the curve, especially when it looks like you're going to have driverless taxis rolling around here. All Tesla has to do is make some kind of a deal with Uber to give their drivers discounts or benefits with regard to financing of their electric vehicles, and that thing's going to go through the roof. Only thing Elon Musk has to do, I think we got to keep out of the octagon with Donald Trump. I'm not bringing politics in here, but that's certainly not going to help Tesla if that feud keeps going on. I think it's best that they both keep their mouths shut and let the business roll as it goes on. And that's that would be my best advice to Elon Musk and Donald Trump. I know they're not watching right now for sure, but that's what I would tell them if
they should be. Hey, AJ, just to keep it interactive, Mike Bennett is here, and he's asking on Tesla. I have no idea what his position is, but what about a diagonal call spread on Tesla? Does that get your interest?
I don't know. I don't know about that yet because see, in the diagonal call spread. Now, forgive me for the folks that don't know options, but when you're doing a diagonal calendar spread, you want to buy long-term options that have lower volatility than the ones you're selling, and that's not what we're seeing right now. If you take a look, the leaps that I'm highlighting here are anywhere between 64 and 67%, while the July volatility, as you can see here, is around 58%. So I would say no go on the diagonal until we get some kind of a volatility spike. And that's what a lot of people are waiting for. The volatility is extremely low right now. Here's my chart on the VIX, and we're just hovering right around these lows. And even the CCI is showing no life at this point. It's gone flatline. As soon as the CCI, this is going to be your clue, folks. Keep an eye on the VIX and keep an eye on that CCI. Put that on your chart. And as soon as that blue line, let me magnify this. As soon as that blue line starts crossing over that black line, that's the momentum line. That's when I think you're going to see the market start to heat up to the downside. So that's going to be the trigger. And it's also going to be the telltale sign that option traders are looking for to get ready to see the short-term volatility explosion in the short-term expiration months. So I would say hold off on that one. Let me rephrase that because we're live. If it were my trade, I would hold off a little bit
Thank you.
until we get the volatility spike. So there we go. I made Nod very happy just now.
Yeah, you made me nervous and happy. It's a roller coaster with you, but thank you. Yeah, so
right.
Anthony, I want to talk about Microsoft next. So AJ, Microsoft, they're having their second round of layoffs. They're laying off 4% of their workforce, which is roughly 9,100 people. It's their second round. This is out of their Seattle group. One can say that it's efficiency. The stock continues to be supported because they've raised their prices. I mean, I know that because I'm certainly paying more for it. But AJ, with regard to it being a tech bellwether and its technicals, what are you seeing with Microsoft? Because obviously that has quite a contagion effect on many industries, because now this is the new age where big companies can be listed in 1, 2, 3, 4 different indexes.
It goes back and forth between Microsoft and we've got NVIDIA as the top two biggest and baddest market cap stocks. They keep going neck and neck, and there's not much separating those two. You can see NVIDIA is 3.834 trillion. And then you got Microsoft right under that at 3.65 trillion. So, if NVIDIA starts pulling back, then that could put Microsoft right back on top. But this is a tough one for me to trade because I look at the monthly chart and I go, man, that's a nosebleed territory up there. And the monthly chart right now, because this is only July 2nd, we got that little itty bitty candle. But this is what's got my attention on Microsoft. This is the first time in the history of the stock where we have a gap, especially a gap that large, below the market, right? So that has not even come back, at least in the slightest, to come and fill that gap. Now, remember, if you're a follower of our teachings here, 80%, I've been tracking gaps for over 40 years, 80% of gaps fill, whether they be on daily charts, weekly charts, or in this case, monthly chart. So there is actually an 80% chance that this gap will fill, and that could bring the stock back, believe it or not, 20% to fill that gap around $400. It's trading closer to $500 right now. So I can't go long it because it's too overextended, and I can't go short it yet with any kind of diagonal spreads unless or until we start to get a pivot. Now, we are getting pivots on the CCI down below, as you can see. But remember, because this is one of the biggest and goes back and forth as being the biggest market cap stock, as soon as it starts pulling back, that's going to draw the entire market down because institutions and hedge funds have a very large holding in Microsoft. So if they have to manage risk, they're going to start lightening up on that position to avoid any of their own risk managers tapping them on the shoulder and, trying to get them out of trouble. So again, it's a tough one to trade until it starts to pivot on the monthly. We are seeing a pivot on the daily, but that's not enough for me to start taking longer term positions. I do have a downside target that's still open down here on the short-term daily chart of 436. It's still a ways down, and I still think that could actually hit. So we'll keep an eye on Microsoft from time to time. And thank you so much. I appreciate that. And look at all the chat going. All right, Alexis, way to go. Thank you.
No, you're doing great. Thanks. I appreciate it. So this brings us to rates. I mean, I never thought in my lifetime that I would have on my bingo card that I would talk about, the Polish central bank, but they're just the latest country to cut rates. This is the second time they've cut it. They're down to 5%. But I bring this up because, if you look at this scorecard that I have up, you can see where the rest of the world's rates are versus the United States. And, everyone does have different conditions, and we can debate different things. But, the Fed is in that quandary we talked about. They're damned if they do, they're damned if they don't. I saw a comment that says that every working person wants them to cut rates. I understand that. But AJ, looking at this scorecard, and I know you talked about, gold and silver. A lot has been made this year so far about the decay and the loss of value in the U.S. dollar. Is there something you can talk to us about in the dollar index and something else that would tag along with that? Because I do think with where global interest rates are, it's kind of a cat in the bathtub, right? People are going in different directions, and we're so focused on ourselves. But there's a lot of contagion effect on a lot of things that we look at.
All right. Well, before we look at the dollar, let's take a look at the 10-year yield here. And very interestingly enough, today we saw this pivot higher. Now, remember what I said about TLT. TLT is inversely related to interest rates. So if we see a pivot higher on the 10-year yield, then obviously that's why TLT dropped. Now, it's going to have a long way to go before it starts breaking out of these highs up here, which is over 4.62%, right there. Now, again, what's Powell going to do? If he's going to lower rates, what is that going to do to the bond market? Again, like I said before, and what is that going to do to the U.S. dollar? I mean, look at this U.S. dollar, and this is $ DXY. I have to back out a little bit to show you what's going on here. This is a channel. This is a price channel for the dollar going back to 2011. And if it does not hold this trend line here and it starts to break out, then you would take the width of that channel, connect it to the downside, create a new channel. That could bring the dollar all the way down to levels we haven't seen since 2008. Now, I'm not in the business of forecasting the dollar because there's nothing you could do to look at it fundamentally, obviously. You have to be an economist to really start looking and digging into your own story for the dollar. So all I have to go on right now is the chart, right? And if it bounces, and I think it could bounce off of the monthly here, you could see some strong support in the dollar. And to your question, Nod, why isn't anyone buying our dollar? They just don't have faith in the U.S. government right now. That look what's going on with the BBB, right? The big beautiful bill. I'm totally against the way it's going out. I think it's being pushed on Americans as a big bag of debt. Again, I think it's going to bite us in the end, and it's adding trillions of dollars to the bottom line. And so they have to keep rates down. Otherwise, this whole system explodes with the amount of debt and the cost of financing our debt. That's why Elon Musk is so pissed off. Excuse me, but that's the main thing. He's out there trying to cut spending and all that. And what they do, well, I don't know if it's going to pass, but they're about to pass one of the biggest bills out there. And I don't know what that's going to do to the dollar. We're going to have to wait to see what Powell has to say. But you got to keep an eye on that trend line for sure.
Yeah. It's just the amount of contagion and impact that these rates can have. I mean, yes, there are a lot of different central banks around the globe, but everyone is watching what the U.S. is going to do. And with us, not making a decision, what's the song there? If you choose not to decide, you still have made a choice. I think there's more to it. I don't think it's flat-footedness. I think they realize that if they cut or if they raise, the impacts are going to be very large. So again, now, as you said, we'll leave that to the economists.
Right. Now we're coming into the close here. We got about 30 seconds before we're going to wrap things up. I just want to remind everyone that we are building our channel. And thanks to you and all the comments and the likes and all the new subscribers, we are doing just that. I look at each and every one of you as ambassadors to the charts, right? The more people who keep an eye on the chart and follow the signals, the more accurate those signals become. And then guess what? We all do a lot better. So again, thank you for liking, sharing, subscribing, commenting, that whole shebang. You keep doing that. Thank you. And we will talk to you on the next report. Have a very happy 4th of July. So long.